And we're here to discuss, plan what to do with our ECB decision. We've already seen one interest rate decision, this one from the UK. And what did we get out of the UK? Basically, folks, things were stable. But that's not the point. We expected things to be stable. The point is, we've got an environment right now which is very, very optimistic. You've seen the numbers from earlier in the week. We saw, especially for the UK. Okay, let me talk about the UK a bit, and then we'll talk about the ECB. But I want to explain why we're seeing this kind of response that we have. Because basically, the environment has changed over the last couple of weeks. And this week's releases in manufacturing PMI, in your services index, are a demonstration of just how things have improved significantly for the UK. And because of this, you have this positive expectation in the UK. We've got people thinking that your cable is just too cheap considering the improvement in the economy. And so we have a bias and we have a market that's basically looking for excuses to be long in your GU. So the question for us going to the ECB decision would be, do we have a similar bias in our euro? Do we really think that markets have priced in the idea that the ECB's decision will sound confident, that the ECB's decision will imply that there will be an upside for the single currency, for your euro? So guys, let's see what we can do. If you look at the charts, what do we have? I'm looking at the dailies, and I would point out that even before our release, we were already trending higher. We were already bouncing from the daily EMAs in your cable. The difference with the euro was actually sold off in the previous week. It's been congesting for much of the week. It has seen tighter ranges lately. So as far as the euro is concerned, I would say market has not priced in the notion of a confident sounding ECB. But a lot of commentaries out there, a lot of talk, and you hear comments even from politicians that say that the situation has improved for the Eurozone. Why is this? Well, maybe the Eurozone did not see the very impressive services PMI or a manufacturing PMI of the UK. But I would point out that Eurozone services was still in expansionary mode. Okay, it turned out at 50.7, above the 50, above the boom bust line. And we also saw final manufacturing in the Eurozone at 51.4, slightly higher than the consensus forecast of 51.3. So from that perspective, I can say that at the very least, the situation for the Eurozone has stabilized. But thinking in terms of us getting some big surge, having a more hawkish policy direction going forward, I think that's just a little too aggressive, a little too advanced. Okay? Yes, we recognize that the problems that have beset the Eurozone may have been, well, I won't say solved, but we've nearly gone through them. So, as a backgrounder, among the pressure for the ECB to consider QE action, to consider lower rates, isn't there. It does not necessarily mean that the ECB will all of a sudden sound hawkish. Okay, if you look at the actual figures that we've gotten from manufacturing PMI, from services PMI, there's a big gulf between how well the UK is doing and the kind of numbers that the Eurozone has. So for someone who's thinking, you had a rally in your UK following the BOE, we should expect a rally in the Eurozone following the ECB. I would say that doesn't necessarily have to happen. It doesn't necessarily follow that a similar pattern would emerge in your euro. So again, folks, as far as our interest rate decision in the Eurozone is concerned, we expect things to hold steady. Okay, no changes in the bid rate. Now, the key, of course, as always, will be what gets said at the press conference. And this is where that positivity, that optimism that we've gotten lately from numbers could be deflated. Okay? We risk having Mario Draghi point out that a single month's worth of data does not necessarily make a trend. We risk Mario Draghi reminding this to us. And if Mario Draghi sounds not as confident as the market appears to have been lately, what would be the implication for us in the currency markets? If he's not as confident as the private sector analysts, the guys who are calling for a turn already in the economy, then that, to me, would be a suggestion that, hey, your euro, it's actually at risk of testing its congestion floors. So guys, let's take a look at our chart. So what do we have for the euro? Where are we from the very big picture? Very big picture means I can go to my monthly chart. And if I go to my monthly chart, where is our euro? You know what? Not too expensive, not cheap. Cheap would have been if your euro was around 1.0. You're basically around the midpoint of your historical ranges. Okay, so nothing impressive being at the midpoint. If I go weeklies, what do I have in our euro? We've had a big sell-off last week. So far, we've tried to get a follow-through bear market this week, but nothing's happened. We ended up with just a range play, and we are currently around the upper edge of your congestion. What else, guys? Your range for the week is how much? You have highs around 32.26, lows around 31.38. You've been stuck in a very tight range in your euro, about 90 pips for the week. Your average daily range these days is about 59. It's almost like you're trading the Canadian dollar, the way how tight your euro has been lately. So what does that tell us? A lot of people out there not really too confident on where to take your euro next. So indecisive markets, tight ranges, indicator-wise, what do we see? From the dailies, a mixed view. You have a bearish MACD, your stochastic has come out of oversold territory. Sure, Mohammed. So, folks, what do we know? We know that we have an indecisive market. We know that there was a big sell-off last week. Okay, I guess relatively speaking, there was a big sell-off. So big sell-off last week. You're back below your daily EMA lines. We have an interest rate decision, which is going to be a non-issue, we think. At least there will be no changes in policy. And people will be focusing on what gets said at the press conference. So to me, this sounds like a chart that I am not particularly interested in taking action in. I'm not a buyer, nor am I a seller. I have to wait for the press conference. If during the press conference, Mario Draghi emphasizes on the need to see more data, Mario Draghi says, let's look at more months of data, then that is Q, which says, okay, he's not ready to talk about potential normalization. He's not ready to provide guidance. And the need to wait for more data would be a dampener to the bullish sentiment that we've had. And if that's the case, I would expect that we find ourselves easing down to your lows for the week. Of course, if Mr. Draghi were to sound confident, then that opens us to the potential of pushing past your 32 area, a moderate resistance level just above your R1. That opens the possibility of us trying to make a run through your daily EMAs. So folks, what happens next for us in Euro is really more of what gets said in the press conference. If the press conference focuses on the improved economic conditions, then that would become argument for you to expect a bullish breakout in your Euro. If the press conference sounds cautious, if Mario Draghi talks about waiting for more months, more data before taking a move, then that becomes an excuse for us to test your your lows for the week, to test your 31, 38 region. Again, average changes have been tight. So I'm not particularly interested in going well beyond your current range of prices for Euro. So folks, you've got that rate decision in about 11 minutes time. But the key event is your press conference. But let's take a look at something else. Oh, by the way, you know that issue about Syria still hasn't been resolved. And that's also something that is weighing on Euro sentiment. What do I mean by this? There's still that possibility that the U.S. will take action in Syria, against Syrian government forces. And if there are military strikes by the U.S. on Syria because of that alleged use of chemical weapons, what would that mean? Well, to me, alleged use of chemical weapons, a U.S. attack on Syria would essentially mean that your euro will become the most vulnerable of the currencies. Why is this? Because much of the oil that it consumes will be affected. Well, and again, that's the thing. We still do not have markets pricing in that possibility. We still do not have the market pricing in the potential disruption of oil supply to Europe from this. So I think once we actually see those strikes happening, that really will become the key. And that would probably rock the boat for your euro, and that would probably lead to your euro easing off. So as far as I'm concerned, what gets said in your press conference, unless it's something very dramatic, I really wouldn't be too keen about keeping my ears glued to this for 30 minutes. Anyway, we have our gold chart. So what about gold? Technically, you have a very nice setup. I'm thinking head and shoulder pattern. And by the way, this is the kind of head and shoulder that I like. When I trade head and shoulders, I prefer that your head and shoulder neckline is in the direction of the trend. We've had a pattern of higher highs and higher lows. Our neckline is in the direction of that. It's also going up. So this is, to me, a classic head and shoulder. Why do I like this? I like these kinds of head and shoulder patterns because by the time you get your breakout, things are fresh. We haven't spent a lot of effort to get to the neckline. We haven't spent a lot of time trying to push below the neckline. So as far as gold's concerned then, you have a head and shoulder pattern. Prices are above your daily EMA lines. The only issue here is that, of course, if there's an airstrike on Syria, then you're going to see markets go risk averse and you're going to see gold benefiting out of it. So technically, you have a nice head and shoulder pattern, but you also have to consider the environment that you find gold in. And right now, that environment suggests that you could potentially just get a fresh catalyst and see this rally up. So technically, nice and bearish looking, nice bearish reversal pattern, but it may be difficult to implement, to take action. All right, still, let's just examine this further. Nice head and shoulder. And by the way, this is coming from 38.2 fib retracement of your big down leg for of your big down leg since September, since August actually of last year. So a very nice place to come from, 38.2 fib retracement. But unfortunately, the fundis, the potential news going forward is likely to keep your bears sidelined. Let me just see this indicator-wise. You have a mixed view. Your stochastic is heading up. Your MACD is pointing down. Another nice situation here. You're just below your pivot. Would have been nice to look for a rejection from that pivot. Head back down to your S1. But I think the risk from here is for us to push higher. All right, if I'm saying we can push higher, we can buy, can we buy? Guys, average range for gold is about 2,483 ticks. And so far you've had 1,611 ticks, which means that you have potentially another 800 ticks. One tick is $1. So another $800 per contract is available for you. Your bearish reversal pattern. All right, let me get back to overview. We are about 2 minutes away from the rate decision. So again, we don't expect anything. But what does the textbook tell us about interest rate decisions? If you have a rate cut, the idea is that, okay, rate cut happens, then there's no incentive for people to keep money in the bank because they make less. There's more expensive incentive for people to spend, to invest, to use capital. And that typically means that you could expect a weakness in the currency. Of course, like we said, we do not expect to see any changes at all. Excuse me. So folks, we're about 2 minutes away from supposedly a big story, but for us, really would be a dud. The more important event would be your press conference. But like we said, if there are changes, if the bid rate is raised, then that attracts money to the banks, and that would strengthen the currency. After this, folks, let's take a look at something that I really like. Still waiting here. Well, we're not really seeing any action, and I would surmise that people who have ultra-fast machine-readable news would have reacted already if there were any surprises. So a lot of price quotes there, but essentially nothing happening. So again, folks, let me just verify that we have nothing. And again, what really is critical will be how Draghi sounds at the press conference in about 45 minutes time. We expect, okay, it's at 0.5. We expect that Mario Draghi will be a bit of a dampener to the bullish sentiment that we now have. He'll remind people that this is just a month's worth of good numbers. It takes a trend. It takes a series of months of back-to-back gains before a trend is made. Okay, that said, let's take a look at one of the things that I really like. I know this is not a Euro chart and we're supposed to cover ECB. So if you insist on ECB alone, just tell me about it. But let me show you what I like first. What is it that I really like? I like this. Your Kiwi chart. What's so special about your Kiwi? Let's put it this way. Your Kiwi has been playing a congestion since June from your 76.89 area all the way up to your 8100, 8150 region. We've just played that range repeatedly. Swing up, swing down, swing up, swing down. And now what do we have? Well, I look at this and I'm thinking we're actually a bit late on this one. We've had a fractal pattern before. Fractal pattern from your Friday candle. We viewed our Kiwi as a buy and dips earlier in the week. We wanted to build or to scale in to a buy from your 77, 74 area. No matter. It's not too late. We've had our initial surge in our Kiwi. It doesn't necessarily mean that we will follow the same patterns we've had before where we just rallied strongly for 2 weeks. It could be a while. The good thing about this is we have a positive swap in your Kiwi. So you go in and you decide to hold on to the trade, hold on to it. Anyway, what do we have now? Like we said, objective here is to really just get a buy from a nice price and I'll just hold on to it for the next few days until I get to 8100 and then 8150. Indicator wise, what do you have? You have a bullish crossover in your MACD. You're trying to push to overbought levels in your daily stochastic. So far, not much luck. We are stuck inside your daily EMAs. We go intraday and what are we seeing? You have your stochastic heading for oversold territory. You have a potential bearish crossover in your MACD. If you look at your price chart, where do we find ourselves? We are just around your daily pivot. We've repeatedly violated daily pivot, but I'm not giving it a lot of importance. What I want to see is this. Can I have your Kiwi pull back to our breakout point at 78.38? This actually could be seen as a inverted head and shoulder if you want. Left shoulder, head, right shoulder. So this could have been an inverted head and shoulder. This could have been your neckline. So let me pull back to that area. And from there, we would like to go for buys. Again, because of the positive swap and the pattern of sideways action of a wide range play, absence of fresh news, we tend to think we will just continue with that pattern and we will just push higher. So folks, nothing immediate, but we're really interested in building. If we could not build or scale into the trade before around 77, 74, now you can look at doing so from this region. Now we can look at building a base just above your 78, 38 area. All right, let me get back to overview. And is there any immediate concern, question about the ECB decision or the press conference? Is there any immediate chart that you'd like us to go to? Euro yen. ADZ Vista. Yeah, the rate decision basically stayed flat, no interest rate cut, no interest rate hike. You can't expect much. It could be that we may have something during the press conference. A lot of people are calling for the ECB, or rather the Eurozone. A lot of people are saying that the Eurozone has turned around. And I'm thinking Mario Draghi might want to do something about that statement, about that expectation. Because if market assumes that the Eurozone has turned around, then that means that commercial interest rates might pick up. And Mario Draghi knows how fragile the recovery story is. So he might actually talk down the recent good news. And if he talks it down, then that becomes an excuse for you to finally get something happening. And that something happening may not actually sound all that good. Okay? Finally get something happen might actually mean that your euro is off. Your euro starts dropping. But anyway, let's take a look at euro yen and then we'll take a look at EUR AUD. So what's with euro yen? You've been weighed by the events in euro, in your EUR JPY. You've been unable to really rally despite the surge that we've gotten in our other yen pairs. So far, your euro yen has remained inside this wide range play. Within that wide range play, what do we see? We face a critical resistance in your euro yen at your 32.41 region. I'm actually inclined to think in terms of, can I get a rejection from that 32.41 area? Why do I say this? You look at your price chart. You've had a lot of false breakouts before from your 32.41 area. So I'd like to see, if not a false breakout, at least prices at that level. That would be well beyond average changes. And then I'd like to look for the possibility of getting rejected from there. For now, your euro yen chart looks bullish in your hourly picture, in the 4-hour level, in the daily scale. But you know what that means? If your 4-hour trader, your hourly trader, your daily trader is already long, who else is there to buy your euro yen up? Who else is there to push your EUR JPY through the 32.41 region? Right? So if everyone is long, then we can't expect fresh money to come in. Without fresh money to drive the market, we can't expect another surge up. So what am I saying? I'm saying that contrary to everything that most books would tell us, that you want to play with your trend. You want that the trend is your friend. This time around, I'd rather go contrarian as we approach our 3241 region. If we do contrarian trades at the approach of 3241, what's the stop? That could be the problem. Where do you place the stop loss? One of your false breakouts went all the way up to 3380. And your previous false breakout gave you 3273. So because of this, I would rather say, if you cannot afford a stop loss above 3273, if you cannot afford a stop loss at 3275, then perhaps the thing for you to do is to just use a very tight stop below your 3241 area. Get 3251, 3253, and you're out. A weak Aussie may no longer be there. After all, the economy's improved. So, because of this, or rather, what's the implication of this for us in EUR AUD? And let me just show you that inverted head and shoulder in Aussie, and then we'll go to EUR AUD. So there's your daily level inverted head and shoulder. It seems that we're not going to get our breakout of this today. But the thing is, this is inverted head and shoulder for our big sell-off from March, from April. We haven't even gotten to 38.25 retracement. So should this get triggered, that would imply that people who were short before are getting out. Remember that the premise for our big sell-off in Aussie is no longer there. When we were at 105, sure, Aussie was expensive. You have problems in the Eurozone, problems in China. But guess what? Like we just said, data in the Eurozone has improved. Chinese manufacturing is expanding again. So the premise for weakness is not there. Which means that there's really, we ought to be looking for a quick turnaround. Now let's go back to that EUR AUD. So what does that mean for EUR AUD? Unfortunately, I've got this dovish expectation for now in your euro. And if we're also dovish in our Aussie, we basically end up with a market that's getting pulled in both directions. Average range for EUR AUD is 155 pips. But you've had price action at 102 pips. But the problem is, as we said, you've got a bearish euro. And your Aussie is also likely to turn out bearish. So, folks, EUR AUD, I think, looks attractive in terms of having a double top and everything. But I think we would end up with another range play here. You would have a hard time in getting out, getting a follow through to our sell-off, because we find ourselves getting pulled in both directions. You don't get me wrong. I actually would want to see a strong Aussie. I'd actually would want to see a break of your 43.67 area. But unfortunately, to do that, you need a strong Aussie and a weak euro. And data from the Eurozone has also improved. Pressure for the ECB to provide liquidity has decreased. So because of that, not keen on doing anything, although I would still say short it if you get to close below 43.67. Alrighty, let me get back to overview. So guys, any comments, questions, complaints? We are 30 minutes away from the ECB press conference. Again, watch for Mario Draghi sounding a little cautious. A cautious Draghi could see your euro weaken. Alright guys, any questions? Any issue? Any complaints? So guys, thank you for attending, and good luck with tomorrow's big NFP data. So see you next week, folks. Thank you, Mohammed.